All right, so welcome back to Coffee Cafe. Right, this is where we left off. We finished paying LV remodeling for the reinforcement. Okay. I'm sorry. Yes, this is what. Yeah, we end up paying LV remodeling for the reinforcement. Okay. So we reached the end of our journal here. Now this is what I normally do, just for like a safety accounting measures, is that if you have a lot of space in your journal, you should best bet to try to cover it up as much as possible because of the way that it is. Like anybody can put a fraudulent charge in here, right? Or someone could squeeze in a transaction that has never happened. So usually when you have something like this where there is a kind of generous gap in there, in this case that's perfect to add in like a check in here. This is what I normally do. It's up to you. You don't have to do this either. But it is definitely something that you might want to consider, especially when you are manually writing in your journals, is that you would cross this part out so that no one could add any transactions here. And of course, because this is a document, or if you're using Excel, you do have options, okay, to protect the sheet. So that means when you do send these files to someone else, they can't go in and edit their own information on there. You can also make it a read-only file where they can only view the file. They cannot enter their stuff in there either. So those are possibilities of what you can do if you are the accountant. You definitely want to make sure that no one has access to these forms or be able to enter anything in there for that reason. Okay. But yeah, so I usually just draw a line in there because so then it prevents anybody from entering any other transaction in there. Okay. So we're going to start on page 6 now. All right. So here we have Albert. Albert submits order number 101 to Katie's Coffee Corner. Now, in this case, let's take a look at this information. So we have 101 sales order 101 to Katie's Coffee Corner. Right, she wanted to buy 15 pounds of regular coffee, 10 pounds of Supreme coffee, and 20 mugs. Okay, bringing it to a total of 1,989.05. Once again, Albert is going to act as a sales representative, and the customers that he's selling to is going to be selling at wholesale price. So he's going to be selling the coffee by the pound, okay, and he's also going to be selling the coffee mugs at a discounted vendor price. Okay, so in this case, right, we have here terms is 50% COD net 5. Okay, we have origination for FOB to the store, and we're gonna charge a $30 fee. So the estimated total due is going to be $209.05. Okay, so looking at this information, what does this tell me? Do I need to journalize this transaction? Why?
Because there's no really transaction other than it's a purchase order.
Good. This is a sales order. Okay, so remember when we're looking at point of views or perspective, to the customer, this is a purchase order. To us, this is a sales order. Okay, because a purchase order to us is when we buy something from someone else, right? So you have to understand that terminology as well. You have to look in context of who is buying. Is it us that's buying, or is it the customer that's buying? So in this case, this is a sales order. Now, correct, but what other context does this also tell us?
That we made a sale.
We made a sale, but when is this sale to be completed?
In June 19th.
Yes. the important part is we're going to deliver it June 19. Now today is June 17, right? So has the sale actually happened? Did we receive 50% COD?
No.
No, because our notion is that we haven't even delivered the sale yet. We haven't completed the actual sale yet. This is just what a customer requested from us. Or in this case, this is what Albert recorded that it's a potential sale, right? So in this case, all we have to do is just keep a mental note about this transaction, because what's going to happen in this sales order is that Albert is going to be responsible to push through and complete the order. So in this case, what I'm going to do is I'm going to make this note into my commissions, okay? Because this is a potential sale for him. So if I go to commissions, right? Obviously, I'm not going to put the date yet, but I have the information that I am selling to a particular person, right? Okay, and this is Katie's Coffee Corner. Now, in this case, I haven't fulfilled the entire sales order yet, right? I haven't completed the transaction, but I do have an estimated amount, right? $219.05, right? That is a potential sale price that I have. Now, of course, we're not responsible to do the sales order, so that's why I didn't have the sales order sheet. But if you want to create a sales order sheet, you are more than welcome to do so, okay? But Albert is responsible for that. All we are responsible is to make sure that Albert goes through with his sales. Because again, that's how, one, he's getting money, but that's two, how we also make money, right? Because we're relying on Albert to make the sales for us. So in this case, that's the only information we need, is that he has a potential sale, Katie, and the amount is potentially going to be for $219.05. Now, again, with this kind of sales order, Katie can call in anytime between now and the 19th to cancel her order. Okay? But in this case, we put it in there. So when we actually deliver to Katie, that's when we put the date in, we make the invoice number, and this is where we start calculating the actual the actual commissions, because he's earned it. Okay? So let's go ahead and continue the rest of the scenario. Okay? So now we have a grand opening. I'm going to push this down so you guys can see it clearer. Okay? We have a grand opening. Okay? So that means when we had our grand opening sales, we had 20% discount because we opened our store. We need to get people to come to our store. So we offered a 20% discount for anybody that decides to come into the store. This is what we sold in the store. We sold a total of regular medium cups. We sold 79 of them. We sold 70 of the large regular coffee. We also sold 81 cups of the medium Supreme coffee and 84 cups of the large Supreme coffee. Here we get the subtotal. Here we get the tax and also the discount. And then, of course, we also received money, okay? So, again, here's what you're going to note is that all cash sales, right? So, in this case, deposit all cash sales to the bank. So, in this case, right, what do we do with this? What are we going to do with this information? This is an in-store sales that when we had our grand opening on the 17th of June. So how are we going to journalize this?
Cash.
Yes, we received cash, but what did we say about the cash? Do we actually have a cash on hand? What are we going to do with that cash?
Deposit to bank.
Okay, so where's that cash going?
Accounts receivable.
That's when customers owe us money.
Cash register. Cash in register.
Is the cash register our bank account?
So would you credit checking?
You would credit checking, yes, because right after the end of the day, Bob's gonna run to the bank to deposit all the cash sales. Okay, so in this case, right, today's date is the 17th, and we are going to, first thing is going to be debiting our checking account. Okay, what else are we going to be recognizing?
Sales.
Sales, okay. Now, what kind of sales? Let's go take a look at the chart of accounts because you have to be specific. Because what if I want to know? If I want to make a graphic report on how many cups of regular medium-sized coffee I want to sell. So let's go ahead and take a look. So sales is correct, but let's take a look at those accounts. Should we specify or should we just bundle it all up in sales?
No. So it sells regular coffee and sells on Supreme.
Okay, so in this case, we got sales regular coffee, sales Supreme coffee. But can I break it down even further? Because don't forget, that's selling the coffee by the pound.
Oh, sells on regular medium coffee, and then sells on, or well, regular. Yeah, sells on medium and large regular coffee, and then sells on medium and large Supreme coffee.
Yeah, so in this case, we're going to be itemizing our sales. So in this case, that's exactly what we do right here for 40,300, 40,350, 40,450, and 40,500 is going to be our sales by item. Okay? So, journal. Okay? Since sales is a revenue and we earned it, it's going to be a credit. For sales, medium, regular coffee. We got sales, large, regular coffee. We got sales, medium, Supreme coffee. And we also have sales, large, Supreme coffee. Okay. Starting with this one, I believe it was account number 4300, 4350, 4450, and 4500. Okay. What else do we need to recognize?
Sales tax.
We need to recognize sales tax, right? Where is sales tax listed in our chart of accounts? Where is sales tax?
In liability, sales tax payable.
Yes, sales tax payable under liabilities. Okay, so account number 27,000. Okay, so yes, we need to recognize the sales tax because that sales tax is not what we own, right? It's what we owe to the government, to owe to the state and local agencies. So in this case, I'm going to go ahead and indicate sales tax payable. Account number 27,000. Okay. What else are we also going to be recognizing?
Discount.
We need to recognize the sales discount. Okay, so in this case, what account number is my sales discount?
For 6,000.
46,000 is my sales discount. And because a sales discount reduces your actual sales, it's going to be debited. Right? So let's go ahead and fill in the information. How much cash am I supposed to be receiving from these sales? $745.94. How much was my sales discount for?
172.27.
Okay. What was my sales for the medium regular coffee? Yep, 157.21. Okay. And then my large 293.16. That's for your supreme coffee. 209.30. Then for the medium supreme is 201.69.
That's
293.60. Okay. How much tax?
56.85.
56.85. Okay. Rule of thumb here. My debits must match my total credits. So I'm going to run my formula here just to do a real quick look to see. I got 918.21 on the left, 918.21 on the right. Okay. What should be my description here?
opening sale at 20% discount.
Good. Excellent. So what do we do next?
You will go to the general ledger.
General ledger. Okay.
And you will go to checking.
Checking. All right, I'm already here.
And you will put it as a deposit, right?
You could you could say deposit in this case. To let me know where this money came from, I'm gonna go ahead and say this was in-store sales. Right? We sold something. That's what we gained. We got this money from in-store sales. Okay. General journal. What page are we on now?
6.
6. Okay. For how much? $745.94. So then, because I was short $70.08, when I had to make these deposit of my cash deposit from the sales, I should have an increased positive cash flow of $675.86. Right? And I'm going to keep this formula once again in my debit section because most cases you won't credit often because usually your bank account should always be positive. But if you ever do dip down, then right, just still keep the formula in there. Just do what I said where I just hide it in white ink. Okay. All right, good. Yes.
The this sell first in cash and then deposit cash to the bank. All sales deposit to the bank.
Mm-hmm.
What is the essential step? Sales in cash and then deposit second step to the bank.
You can,
Why?
yes, you can do that. Yes, you can do that. But I already know at the end of the day, I'm going to take that money and put it into the bank. Because I told you to do so, right? At the end of every day, you shouldn't be carrying around thousands of dollars in your register, right? Anybody can break open the store and steal that money. Your best bet is to go to the store or go to the bank and deposit the money right after, at the very end of the day.
Yes, I agree. But before deposit to the bank, I receive this money cash in register.
Remember, the cash in register is what you need to have the money in the register for. Yes, you if that's what you want to have, if that's what you want to do, you want to do an extra journal for that, you can be my guest. But in this case, that's a waste of journal space. Because at the end of the day, that money's going to go straight to my checking account. And that way I don't have to go into my ledger, increasing my cash in the register and then decreasing it like 2 seconds later. In this case, I'm eliminating an extra journal because it's unnecessary. But if you are not going to deposit the money at the end of every single day, then yes, I would recommend you to do that. To instead of depositing the money into your bank right away, I would debit checking, then yes, I would debit the cash in register. And then whenever you feel like going to the bank, you can go ahead and deposit the money to your bank whenever and do an extra transaction to decrease your cash in register and increase your checking account. Okay? All right. What else?
And now you will go to sales discount.
Sales discount, which is going to be our first account that we're going to enter in our revenues. So sales discount, oops, I skipped it. Oh, I missed it. Sales discount right here.
And you will put for in-store sales as well.
Mm-hmm. But in this case, how much was the discount for?
The discount was 172.27.
Like I meant percentage-wise.
Oh, 20%.
Yeah, that will be something that you want to make sure you put in as a note. So I'm going to put grand opening because that was the reason for the discount, and it was 20%. Okay.
And general journal 5 for a debit of 172.27.
We're on page 6. 172.27. Okay. So this is also where most cases when you're transferring information to your ledger, this is where you can also make your mistakes here as well. So make sure that it is 127.27. I have 172.27. Okay. All right. Next, account. Is going to be sales medium regular coffee. Excuse me. All right. 617. How many cups of my medium regular coffee did I sell?
157.21.
How many cups?
Oh, 79.
We sold 79 cups. So however you want to put it, sold, I'm going to put 79 cups. Okay. If you do just 79, you can go ahead and do your equal sum formula in here to get your grand total. But if you have other words in here, unfortunately, you won't be able to do that. So whatever way that you want to keep track of how many cups you sold, you could do however. Okay. Post reference. For the 157.21. What about the large regular coffee? How many cups did I sell?
A 70.
You sold 70 cups. For a grand total of
209.30.
209.30. Okay. What about your medium supreme coffee? How many cups did I sell there?
81.
You sold 81 cups. For how much?
201.69.
201.69. Okay. And then sales for your large supreme coffee. How many cups did I sell?
84.
84 cups. General 6 for how much?
293.16.
293.60. And then let's see. Last but not least, we have sales tax payable. Here is sales tax payable. For how much?
For 56.85.
Okay, for $56.85. So we finished the journal. We finished the ledger. What else do we need to do?
Do we have to put it in cost of goods sold?
Not yet.
Different?
Not yet. We're not done with this transaction yet.
Okay.
What else do we need to do? What's next? Do we need to go to the subsidiary ledger?
No,
Why?
because isn't that it's all been in store, like just in business. We haven't dealt with anyone else.
Correct, right? We don't know who these customers are. They're just random folks that just came in and just bought coffee. We don't need to keep track of who they are. Okay? So in this case, no need to go to our subsidiary ledger. Okay? But one thing I want you guys to do before you guys move on to the next one is I need to make a deposit, right? Because how is the cash that you just received going into the bank, right? You need to record that you received cash of $745.94. And because I said on the 17th, I'm going to deposit that money into my checking account. Okay? So in this case, right, you need to make sure that you collected all the money, that you are going to go deposit the money. So then you have a track record of your records of making your deposits to the bank. Okay? Again, this is very crucial, especially when we do your bank reconciliation, right? How many deposits did you make? When did you make it? Okay, and when did they clear? So in this case, the cash for the $745.94, I deposited today at the end of the day on June 17. So now this amount should be appearing in my bank account. Okay. So then now, right, it said that for the in-store use, for the regular coffee, we used 10 pounds of coffee. And then for the Supreme coffee, we used 15.5 pounds. Okay? What do we do here? We used some pounds in the store, right? Because that's what we sold, right? In this case, I sold a bunch of coffee cups. Right? I sold a bunch of medium and large regular coffees. And I also sold medium and large Supreme coffee. So this gave me a grand total that I used all of this in the store. So what's so significant about this? Why do I need to journalize this?
Is it your inventory?
What kind of inventory do we have? What kind?
I don't know.
Okay, there's only two kinds of inventory.
Perpetual.
We have perpetual inventory. That means every time we sell a product, we must update our inventory. Every time we purchase a product, we must update our inventory. We are constantly keeping track of our coffees because those ones are going to be perpetual inventory. So in this case, right, I told you that in the store we used 10 pounds of the regular coffee and we used 15.5 pounds of the Supreme coffee. So in this case, when we used those coffees in the store, how do we adjust our inventory accordingly? How do we adjust my inventory if I used or sold the product?
You will go to the inventory sheet.
Okay, but I want to let's just journalize the accounts that we're going to use first, and then we'll go to the inventory worksheet. What accounts would I use to adjust my inventory? All right, this is what you mentioned earlier.
Oh, the cost of goods sold.
Cost of goods sold. So let's go ahead and take a look at my chart of accounts. Do I have a cost of goods sold account?
Yes.
And if I do, is it broken down specifically?
Yeah. To regular coffee, Supreme coffee.
Correct, right? 550, 500, 550, 100. So, cost of goods sold, and because I used both of them, right? It's an expense account, so it's going to be debited. So, COGS, regular coffee, and COGS, Supreme coffee. for, was it 50, 50, and 50, 100? Now, I have to adjust my inventory. So where, if I sold or used this amount, where am I taking these out from? I'm adjusting my inventory, right? So where am I taking this cost of goods sold regular coffee out from?
From just the asset of the regular coffee and supreme coffee.
Correct, right? Because in this case, I used up 10 pounds. How does my book know that? Well, I have to take it out of my inventory, right? To represent that I no longer have those items anymore. So in this case, that's what you're going to do. Your credit is going to be crediting the regular coffee and then crediting the supreme coffee, right? And what are my inventory items for that one? What's my account numbers for that one?
12,020 and then 12,040.
Good. Okay. 12, 20, 12, 40. Okay. So in this case, right, this is where I need to walk away from my journal because now I need to calculate. Because in this case, I have two different methods I need to calculate on my inventory worksheet, right? Because each coffee that I use or sell has a different price point, right? So this is where I'm going to go to my inventory worksheet and let's go ahead and compute those figures. So starting with the first one, regular coffee, right? It is June 17 and we used 10 pounds, okay? Now, how much is my 10 pounds, or sorry, what is my cost, my average cost per item? In this case, right, because I'm using moving average. So what is my average cost per item right now?
$1.60.
$1.60, okay? So I'm going to go ahead and be consistent to use my equal round formula, even though I have a rounded number. So in this case, how much is my total cost of goods sold?
$10.60.
So one more decimal. Okay, it's going to be for $16. Okay. Now, however you figure out your totals and stuff like that, I'm just going to go ahead and skip over here and say, well, I used to have 125, but I end up selling 10 of them. So how much do I have left remaining?
115.
115. If I started out with $200, but I end up selling $16, how much should I have left in total cost?
284.
284. You
Oh, 184.
184. Okay. Good. So of course, again, where I put my formula in this case is I'm constantly figuring out my average cost per item because I'm using moving average, right? Where I don't care what batch came first, I don't care what batch came last. I care about the grand total cost and the total quantity that I have, and I'm constantly recalculating my average cost. So in this case, it's still going to cost me $1.60. Okay? And of course, I'm going to use my method here where I am going to block off this section so I don't get confused. Okay? So from here on out, right? I have a total of 115 pounds of coffee left at $184. And my cost of goods sold here was for $16 for my regular coffee. Right? All right. So let's go ahead and figure out our supreme coffee, and then we'll go ahead and journalize it. So 617. Now for my supreme coffee, how many pounds did I use for the in-store sales?
15.5.
We used 15 and a half. Okay. Now in this case, what method am I using to cost out my inventory?
FIFO.
FIFO. In this case, I only have one batch and one batch only. So in this case, how much is my cost per item for batch number 1?
180.
It's $1.80. Okay. So then, now I need to figure out how much 15 and a half pounds is for $1.80. $27.90. So this is where you have to do your math very carefully as well too, right? I have 125 pounds, right? And I sold 15 and a half, or used 15 and a half. So therefore, I should now have 109. Let's do that again. 125 minus 15 and a half. Okay, so I have 109 and a half pounds of coffee left remaining at 197.10. Okay, and there it is. Okay, so therefore, my cost of goods sold for the supreme coffee is $27.90, while my regular coffee was for $16. So therefore, I need to journalize that, saying that I used $16 for my regular coffee, and that's how much is going to be taken out for my inventory, and I got $27.90 from my supreme coffee, and that's exactly what I'm taking out from my inventory. Okay. And my note here, I'm going to say this was because of in-store use. I used it in the store to sell my coffee. Okay. So then now, where do we need to go next?
To the general ledger.
General ledger. So now we're finally dipping into our COGS tab. Okay, here you go. Cost of goods sold, regular coffee. How many pounds did I use?
£10.
Okay, for a total of
$16.
okay. Okay. Okay, what about my supreme coffee? How many pounds did I use? 15 and a half pounds. For a total of
$27.90.
$27.90. Okay. Then I need to update my inventory, right? Because I end up using my inventory. So here we are, regular coffee. Oh, that's Supreme Coffee. This one's regular coffee. Okay. Exactly what I wrote in earlier. I used 10 pounds, which is going to now decrease my inventory balance by $16, right? So therefore, what should be my ending balance in my inventory?
184.
184. And this is where you're going to be using your inventory worksheet and comparing it to your ledger. Okay? Your ledger is going to hold true at all times because you are using rounded numbers, where your inventory, not so much. But at least I know this is a reference point that I can say I did my accounting correctly, or I didn't I didn't fat finger, I didn't make any errors or anything like that, right? I know for a fact that my regular coffee right now, right, holds a value of $184. Okay? And then last but not least, you have to update your Supreme Coffee. So 617. Okay. So if I used 15 and a half pounds of coffee for $27.90, how much is my ending balance in my Supreme Coffee?
197.10.
Good, right? 197.10, which we know matches our inventory worksheet. Okay. All right. Good? Everybody good so far?
Yeah.
Okay. There you go. We don't need to involve anybody because this was an internal transaction, right? I'm updating my inventory. Doesn't involve customers, doesn't involve vendors, doesn't involve employees. Okay. All right. And that is it for the 17th of June, right? All right, we got through with one whole day of sales. So now it is finally June 18, and we finally received our Atlas Coffee invoice number 320 with our coffee, and we got terms of 1% 15 net 30, and so on and so forth, right? This is our total cost of the coffee, right? One for 366.25. Okay. So, how do I journalize this? I received my inventory.
You would just get regular and supreme coffee and supreme checking.
Did I pay?
Oh, oh, you use the check, right?
Where does it say I used a check?
Use check number or at the bottom.
Is that for the same transaction we're looking at? Is this for the coffee?
Oh, no. Oh, oh, you still haven't paid, I guess.
Yes, I just received the bill, right? They gave me terms of 1%, 15, net 30. Did I say I made a payment?
No,
No. So what's my assumption here?
it's on account.
It's on an account. Good.
So account payable.
Accounts payable. Okay, so again, we have a regular coffee. We have a supreme coffee. And we have an accounts payable. Okay. Regular coffee is $12.20. $12.40 for supreme, and accounts payable 20,000. So therefore, what amounts am I going to have for my regular coffee, my supreme coffee, and my accounts payable?
So you would debit 170 on regular and supreme for 196.25, and credit 366.25.
Okay. And my description should be
Atlas Coffee Imports, invoice 320, 1%, 15 net 30.
okay.
And now you will go to the general ledger
Okay.
for regular coffee and supreme.
Okay. Okay. Regular coffee. How much for?
170.
170. Okay. So what's my account balance?
354.
354. Okay. To go down to supreme.
One 196.25.
My total come good.
393.35.
393.35. Okay.
So do we go now to like, yeah, liabilities capital?
Mm-hmm.
So June 18, invoice 320. Or 366.25. We're at 15,222.65. Oh no, I'm wrong one. I'm wrong.
Okay.
Okay, I found my mistake on this. Yeah.
No worries. Okay. So we should have now $13,662.65. Okay. Now what's next?
And you will go to subsidiary ledger.
Subsidiary ledger, right? Because we dealt with Atlas Coffee. Okay, here we go. Atlas Coffee. The invoice number?
Uh, 320.
Was I given terms?
Yes. For 1%. Oh, sorry.
No, that's right. That's right. Good. So now I need to calculate my discount due date because if I make it within X amount of days, then I get to receive a discount of 1%. So in this case, right, when do I need to pay to make my discount?
And 12th of July.
12th of July? Let's say it again.
Oh,
The second of July. Right.
Yeah, because in this case, let me see. 15 days from now is the 28th plus 5 should be the 2nd of the 3rd. Let's do that again. Yes, because there's only 30 days in June. Okay. So then when is going to be my actual due date?
18.
18th of July. Okay. Invoice amount?
366.25.
Okay. So here I owe Atlas Coffee Importers in grand total $720.75. All right, so what's next?
Can we quickly just go over to the accounts payable one, just so I can get my numbers again?
Okay, of course. Mm-hmm. So here we go. Accounts payable.
All right, thank you.
Okay.
And now you will go to inventory worksheet.
So how many pounds did I buy? At what cost per item?
For regular coffee, 125 for 136 each pound.
Okay. In here, freight's gonna come right after this, so we're gonna stop here for that. Supreme. How many pounds did I buy at what cost per item?
125, $1.57 for each pound.
Okay. Good. So then what do I need to do next? What's the next journal say? What happened next?
Okay, you got a bill for freight. For freight.
Mm-hmm. So how am I gonna journalize this?
So would you use a freight line? You would debit freight line, and then use the checking to and credit checking.
Do I have an account called Freightland?
Oh, freight expense.
Okay, now in this case, right, what is this freight a part of? Is it just a regular expense that I'm going to pay? Or is it going to be a part of my inventory?
Now
It's
you
sorry.
add them up to the regular coffee and the supreme coffee.
Exactly.
Yeah.
Because in this case, this is perpetual inventory, right? This is going to be included as part of the cost of inventory. I'm going to make my customers pay into this instead of bill it as myself as a separate expense. So in this case, that's exactly what I'm going to do. Gonna okay, and I'm going to credit my checking account. Why do I need to credit my checking account?
Because we're using a check.
Okay.
Because sorry. Because it's cash on the command.
Exactly. It's cash on delivery. So How much am I paying for? Who am I paying for?
$64.50 to freight line.
$64.50 to Freightline. So then, how do I split my freight?
$170 times 8.25.
170 times 8.25?
By 8.25%.
Where is this numbing? Where are you find? Where are the numbers coming from?
I'm totally confusing myself with tax. I'm sorry.
No worries.
Whoa.
Okay, so in this case, right, our freight that was charged was $64.50. Now, if this was based on weight, right? How many pounds of coffee did I buy?
Oh, it's equal. 125, 125. So just divide it by 2.
Correct. So in this case, I'm going to divide the shipping in half because if it's based on weight, then they're both even, right? So in this case, I'm going to take 64 and a half divided by 2 to get $32.25. So there's another $32.25 to equal $64.50. Okay. So what's my note going to be or description?
Freight line, cash on day, invoice 516, check 1518.
Good. Freight line invoice number 615. Okay. Oh, sorry. 516. COD. And comma check number 1518. Okay.
Teacher,
Yes.
I have a question.
Okay.
This freight, we have to add to the cost of these two items to pricing the quantity per pound. How can I do this?
How many pounds do you have that you got shipped in grand total? How many pounds of coffee were you shipped?
250.
250 pounds, right? If you wanted to do an actual per pound, you could take $64.50 and divide it by the 250 pounds and then multiply it by 125 to get you to $32.25. If you want to break it down to per pound. But in this case, why do you need to do that when you know you have a grand total of 250 pounds and both of them are even, right? So in this case, this is a quicker way of looking at it. But if you want to calculate it by pound, that's what you would do. You would take the total amount of freight that you were charged, divided by the total amount of pounds that you were delivered, and then calculate accordingly.
I mean the total cost 366.25 plus 64.50. It is this is the cost of 250. I mean,
What is 200 and the
the pounds.
we're going to figure that out in the inventory worksheet.
Okay, thank you. Thank you, Peters.
Right, any other questions? So what comes after this?
General ledger.
Yes, we need to go to the general ledger now. Okay. Regular coffee first.
And you would debit 32.25 for a total amount 386.25.
Good. Okay. Supreme coffee.
You debit as well 32.25 for a total amount of 425.60.
Okay. Good.
Invoice number 516.
Okay.
And check number or payment on check number 1518. With a credit of 64.50.
It's 11:36.
Good. 61136. Good. Okay, what's next?
You would go to subsidiary ledger.
For how much?
$64.50.
Right, and you still owe them nothing. I mean, what's next after this?
And we gotta go to inventory worksheet.
Okay, starting with the regular coffee.
$32.25. $1.62.
$1.62, but in this case, do we care about what that cost is?
Oh, no, because it's an average.
Exactly. So in this case, right, all we got to do is now update our inventory, right? We had 115, then we just added another 125. So you have 240. Okay. If you started out with 184 and you added 202.50, 202.25, you now have 386.25. Okay. Calculate what that cost is. So it's going to be the average cost of per item is going to be $1.60938. Okay. So now we got to go figure out my supreme coffee, right?
Quantity is $234.50.
Now in this case, what costing method am I using for this one?
FIFO.
FIFO. So do I need to combine it?
Oh, no.
No. But I do need to figure out what the cost per item is for this batch of inventory right here.
1.83.
1.83. Now this could be 1 point something else, right? It doesn't always, let me see, I'm gonna stretch it out. So it's 1.28.
Yeah.
Okay. Now, of course, if you had your sum here, then yes, this is where you add in that batch of inventory. So 125 pounds at $1.838. You do your formula here. Should give you now 425.60. Okay. And now that's the 234.5 pounds you were referring to. This is your goods available. Okay. Okay. So I'm going to stop here because that's it for this section here. And we're going to go ahead and go on break. So right now it is 2:03. I'm going to round to 2:05. So go ahead and take your 20-minute, actually, take a 15-minute break because we're just short on time, I guess.